All right, let's get right into it. Today, we're stepping into the financial arena for a classic showdown. In one corner, you've got the lightning-fast, high-stakes world of intraday trading. And in the other corner, the slow, steady, patient path of long-term investing. We're talking two totally different philosophies, both chasing the same prize, creating wealth. So that really brings us to the big question, right? Is the stock market a sprint or is it a marathon? Are you playing for a quick win in the next few minutes, or are you trying to build toward a finish line that's years, maybe even decades down the road? Let's figure it out. So here's how we're going to break this all down. First, we'll introduce our two big contenders. Then we'll get up close and personal with the day trader and then the wealth builder. After that, we'll put them head to head to compare them directly. Then, and this is the important part, we'll help you figure out which strategy fits you. And we'll wrap it all up with what the experts say is the winning playbook. Okay, first things first, let's set the stage. The arena is the equity market. Now, everyone in this arena is buying and selling shares. But our two contenders, they're coming into this fight with completely different game plans, different risks, and, very different potential rewards. First up, let's meet the day trader. Think of this person as the market's high-speed sprinter. This strategy is all about being fast, aggressive, and taking on some serious risk to get those immediate results. So what's their signature move? Well, intraday trading is exactly what it sounds like. Buying and selling stocks all within the same day. The goal here isn't to own a piece of a company. No, it's all about cashing in on those tiny little price movements that happen minute by minute, even second by second. So you might be asking, what's the appeal? Well, for one, there's the chance for really quick profits. We're talking minutes sometimes. Traders can also use something called leverage, which is kind of like borrowing money so you can control a big position with just a little bit of your own capital. And because you close out all your trades by the end of the day, you don't have to worry about some crazy market news tanking your stocks overnight. But, and this is a huge but, here comes the reality check. Look at this number. The data is pretty clear. Over 90% of people who try intraday trading end up losing money. It's just a brutal, brutal statistic that really shows you how incredibly hard this is. So why do so many people fail? Well, the risk is just astronomical, especially when you use leverage, which can magnify your losses just as easily as your gains. You have to be an expert at technical analysis, it's unbelievably stressful, and all those frequent trading costs can just chew up any profits you might make. Okay, now for our second contender. In the complete opposite corner, we have the wealth builder, the steady, patient marathoner. This strategy has nothing to do with speed. It's all about endurance and resilience over the long haul. The whole philosophy here is just fundamentally different. Long-term investing is about buying into great, solid companies and just holding on for years, sometimes for decades. The real goal is to benefit from the actual growth of the business and tap into that incredible power of compounding returns. And the perks of this approach? They're really powerful. You get to harness compounding. That's where your returns start earning their own returns. It's magical. The risk is way lower over time because you can ride out the market's ups and downs. It takes up way less of your day. You usually get a much nicer tax bill. And honestly, it's just a far less stressful way to build your financial future. And hey, don't just take my word for it. This isn't just some theory. This is a proven method. We're talking about legendary investors like Warren Buffett. This is exactly how they built their massive fortunes, using this long-term, business-focused approach. But look, it's not a perfect strategy. Nothing is. The biggest challenge here is patience. I mean, real patience. Wealth creation takes years, not days. Your portfolio is going to have temporary drops, and you need the discipline not to panic and sell. And it does require some fundamental knowledge, being able to understand if a company is actually healthy and valuable for the long haul. Okay, we've met our fighters. Now it's time for the official tale of the tape. Let's put these two strategies right next to each other and see how they really stack up across all the key metrics. When you lay it all out like this, the contrast is just stark. On one side, you have this high-risk, high-stress, high-cost sprint that's measured in hours. On the other side, you've got a lower-risk, lower-stress, lower-cost marathon that's measured in decades. They're not just different strategies, they're practically different universes. All right, now we get to the most important part of this whole thing. Let's forget about the market for a second and just think about you, your personality, your goals, how you handle risk, how much time you actually have. It's time to choose your fighter. Trading might be your game if, and these are big ifs, you have a deep, almost professional knowledge of technical analysis. If you can dedicate hours every single day to just watching the market. If you have nerves of steel and can handle massive risk and pressure. And most importantly, if you're prepared to treat it like a serious profession, not some hobby or get-rich-quick scheme. Now, on the other hand, investing is probably your path if you're looking for steady, sustainable growth over time, if you have a day job or a business to run and can't watch the markets all day, if you just prefer a lower stress, lower risk approach, and if you want to let the magic of compounding and dividends do the heavy lifting for you. But what if it's not strictly an either-or decision? Let's move on to our final section and see what the experts actually recommend. Their winning playbook might surprise you, because a lot of the time, it's actually a balanced strategy. But before we get to that playbook, let this one sink in for a second. This is really the foundation of any smart strategy. 95% of real, lasting wealth that comes from the stock market, it comes from long-term investing, not from short-term trading. So that brings us to the expert approach. It's often called a core satellite strategy. Think about it like this. The huge majority of your money, your core, that's in safe, long-term investments. Then, a much smaller satellite portion, maybe 10 to 20%, can be used for that higher-risk trading. This way, you protect your main wealth while still getting to be active in the market if you want to. So let's bring this all home with a final conclusion. While trading can be a fit for a very small, very dedicated group of professionals, for the vast, vast majority of us, long-term investing is the undisputed champion. It's the clearer, safer, and much more reliable path to actually reaching financial stability and freedom. And that really just leaves us with one final thought. When you look at your own financial future, what game are you really playing? Are you just chasing today's points, or are you building your strategy for tomorrow's championship? Your answer to that question will tell you everything you need to know.